I have to tell you, I could get used to this being on the East Coast thing. I've already done a 6-mile run and had plenty of time to prepare for our 7:30 Pacific time. So I am truly enjoying being on the East Coast. With that said, we've got to talk about what the Fed said over the weekend. We have to talk about a new Zillow forecast that is actually 20% worse than Redfin. More on that later. I also want to read you a quote from Russell Brunson. I'm reading one of his books, and I want you to think about it and let me know your thoughts. It's actually one of those questions that I think I'm actually going to create a video on. But let's get into the news. Let's talk about the good old Fed. Remember yesterday's daily financial news? We talked about 11 Fed speeches happening this week. Well, Neel Kashkari has come out and not disappointed. Neel Kashkari came out and basically said, hey, if we are going to have one rate cut this year, we're going to have it in December. Yes, folks, post-election, not September, not July, but in December. Again, we need to realize that the Fed really has no idea what's going on in the economy. We've seen inflation come down recently. We've seen unemployment pick up a little bit. This Thursday with the weekly unemployment claims will be important. Did we have a blip or do we have a trend? Because again, folks, as I've tried to share with you over the last couple of weeks, it is my belief that the Fed will be late and they will cut by 50 basis points in November. Neel Kashkari said things like, we are in a good position to take our time and collect more data. If we cut rates too soon, it probably pushes up home prices. And hopefully the supply side, meaning builders, can actually build more homes. He wants to fix it from the supply side, not from rates. Again, there's a lot of chatter out there about, is higher rates raising inflation? The idea being you have high rates, less building. As you go through the product that is already to market, we have nothing behind it, a la Ken McElroy. And ultimately, we're going to have a double dip or a double peak, I guess, where inflation takes off again because of higher rates. Would rates be cutting rates, lower interest rates, thus leading to more home purchases? Probably, but we are in interesting times. All right, folks, let's get to Zillow. And this is one of those percentage things that a lot of channels put out there to scare you. It is accurate to say that Redfin's home price forecast is 20% worse than Redfin. So Zillow is 20% worse than Redfin. Don't know if I got that backwards. But here's the deal. Michael, show me the absolute numbers. Stop talking in percentages. Yes, good point. Good point. Don't fall for that nonsense. Remember, Redfin price forecast for the next 12 months was negative 1%. So if Redfin is 20% worse, what is Redfin's actual forecast? Drum roll, please. 1.2% negative. Yes, folks, Redfin's housing forecast for the next 12 months is a negative 1.2%, and it is 20% worse than 1% call by Zillow. I guess I messed that up again. Man, I got to look at my notes more closely. Zillow's forecast, 1.2%, 20% worse than Redfin. I think I got that backwards twice. Crazy. So at the end of the day, one of the things I noted as I was reading is, can mortgage rates fall? Well, again, remember the Fed speech, Neel Kashkari, he kicked rates up. The 10-year note has to be up this morning, given that people will be pricing in rate cuts after the election, because right now people are front-loading September. I think last time I checked, the chances of a September rate cut was above 50%. I'm going to guess it's less than 50% this morning. So lots of stuff going on there. All right, folks, I want to read you this quote. Clean the wall. This is cement, man. This is like New York special whatever this is. This is like cement. Also, it's not my house, so I'm not cleaning anything. We're actually staying in a midterm rental that's probably 300 square feet, but it's got a kitchen. Anyways, you clean the wall. Let's go and let's talk about Russell Brunson. Russell Brunson. This is a quote that I read from his book. It's very thought-provoking. You might have to rewind this and hear it again, but I would like my followers to think about this. Here we go. If we are talking one-on-one, if me and you are talking one-on-one, 3 years from now, and we're looking back over time, what has to happen in your life, both personally and professionally, for you to feel happy with your progress? Think about that. Think about that. What if we were talking 3 years from today? What has to happen personally and professionally for you to feel happy with your progress? I thought that was an interesting question, very thought-provoking, allows you to get quiet and think about the future and what do you want to do today? What do you want to do today to kind of work towards that goal in 3 years? Got a very important note from Resi Club. If you're not following Resi Club on Twitter or X, you really should. He went out and did a survey and he said since 1975, the average 5-year return on U.S. homes is 26%. 26%. So what I did is I said, you know what? Most of us are not buying homes for cash. So what does the math look like if you put 20% down? So again, you put 20% down on a home, you actually get a 26% return on the total number. That actually calculates to 130%. So what I would tell Lance in Resi Club is if you assume a 20% down payment, your average return over 5 years is 130%. That's wild to think about. This is why real estate and leverage is just a different game. Very, very interesting. So there's been a lot of chatter on X around a survey that said the most important election point this cycle for millennials and Gen Z is housing. So obviously housing is very unaffordable. It's only been worse since 1981. It is bad. It is bad today. So I guess the question I have is if millennials and Gen Z really want to push the idea that housing is a problem, I wonder if they show up. Will they show up? Will they vote? I don't think it's a secret that in past elections, the youth vote has not shown up. I don't think that's speaking out of school. But if the millennials and Gen Z can coalesce and show up and vote, there's enough of them to swing the election. Millennials and Gen Z have the power, given the size, that if they coalesce around a candidate and if they coalesce around an issue like housing, they can swing the election. History says they will make a lot of noise, they will make a lot of chatter, but they won't show up. So, Gen Z, millennials, if you're watching, vote. Vote, vote, vote. All right, folks, we did get one economic number today. Thank you for the Father's Day note. I appreciate you. That's very nice of you. Had a great day. We did get one economic metric. We will get retail sales tomorrow, which is a big number. Today was the New York Fed Empire State Manufacturing Survey. What is going on in the Empire State's manufacturing? Again, we will go through the numbers, which mean nothing to you. Watch the trend and watch how much the experts were wrong. That is what we do with all economic numbers. So the previous number was negative 15.6. Expectations was negative 12.5. Actual, negative 6. So still contracting, still on the wrong side of zero, but it is less bad, and I would argue significantly less bad. So again, lots of stuff going on in the economy. We will get retail sales tomorrow. For those of you that look for my weekly goals video, I have done the numbers. I have tracked them. But given I did not bring my camera or other items, I will record it next week. But I do have the numbers. I will just record 2-week summary next time. I don't want to do it kind of halfway. So I've got the numbers, and I just will post that video tomorrow. Again, folks, if you are part of the school community, I want to give you a reminder that you have another opportunity to interact with one of our millionaires. Dion from Dion Talk Financial Freedom will be going live Wednesday at 5 o'clock. Wednesday at 5 o'clock Pacific PM, 5 p.m. Pacific. He's going to go live because people in school wanted to talk about self-management. How does the lazy landlord self-manage? How do you do all those things? Dion will take your questions. It is your opportunity to interact, join the community, get involved. The Lumberjack Landlord will also be creating a self-management. We have yet to schedule it, but coming soon. Also, don't forget, you got Matt the Mortgage Guy next week talking mortgage. You've got Bo Eckstein with a small business summit. We are filling up your calendar with things that should or could interest you because we care about you. And don't forget about my comment yesterday. I am looking for school members who want to start accountability groups. I spoke with Frank, one of the school members, about possibly doing his monthly in school. My hope is we find 2 or 3 other school members who could host different days. I want to really get the school community together. I want you to network, ask questions, tell me what the audience needs, and we will fill it. So folks, at the end of the day, I want you to have an amazing day. Again, I want you to think about Russell Brunson's quote. Let me know what you think. If we are talking one-on-one 3 years from today, looking back over the last 3 years, what has to happen in your life, both personally and professionally, for you to feel happy with your progress? Have an amazing day. Take care of yourself. Be well. Like, subscribe, comment. Later.